Hello, it's a rather wet and miserable Thursday the 29th. I'm FxPlew and this is the market brief. So Andrew Bailey's been on. He said that the May inflation report was surprisingly bad and they needed to send a strong message to the market. Indeed, they felt that a single 50 basis point rate hike was more effective than two more 25 basis point rate hikes across the next two meetings. He's on the right track too. The latest employment data and the inflation report made it clear that the Bank of England, if they were to be considered serious about bringing inflation under control, a strong reaction was needed. Meanwhile, MPC member Silvana Tenreiro, who will leave the MPC in September, she's concerned that all this interest rate action risks overshooting. She fears that inflation may ultimately drop below the government's 2% target as the economy catches up with all the monetary policy action seen to date. Guess we'll see about that one. Over in the US, Powell's been on. He was more upbeat about the US economy, and recent data has led him to believe that at least two more rate hikes would be easily absorbed. So that's that then. The pause at the last meeting was a one-off, just to try things on for size, but the Fed is back in business. The recession risk remains, but Powell is not too concerned about that. He believes growth will be modest this year and that policy actions that they've taken have seen inflation fall significantly since last summer, but he believes they are laying foundations for a strong recovery. Again, guess we'll see. In the market, the dollar recovered some ground lost earlier this week. The dollar index climbed to 103.15 as sterling fell back to about 126.05 against the dollar, which was a two-week low. We kick off this morning from around 126.25 against the dollar, about 115.90 against the euro, and euro dollar was just shy of 109 on the open. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.